Let's bring in Jihan Bose-Little, co-founder and managing partner of Bracket Capital. The investment management firm specializes in private markets. Very good afternoon to you. Thanks so much for joining us.
Pleasure to be here again, Wilfred.
What's your take on essentially JP Morgan moving into this space? Is there enough demand out there for the ability to trade private market companies?
Absolutely. I would say actually that the challenge will be on the other side of the equation. The demand is very strong, increasingly strong from various different investors who I'd classify as crossover investors. You're seeing more hedge funds, more private banking clients looking for these shares. And so it's no surprise that JP Morgan and I think other banks will probably follow suit in the very near term. By nature, private markets are capacity constrained, however. And so getting allocations in the size which is necessary to satiate that demand, I think will prove to be more of the challenge than the demand side of the equation itself.
To that point, you've been involved in this area for a while, a little ahead of JP Morgan moving into this space. What are valuations like at the moment, and how long will they remain there if there's suddenly an influx of demand for a limited number of stocks or companies or shares? Might this be quite a short-lived foray?
It's going to be interesting to see. I think that one thing we know is the case is that traditional asset management with public market only allocations is really a thing of the past. The line between public and private investments is really blurring and dissolving. I think most asset managers and indeed most investors are looking for allocation to equities in a more broad-based format, and that includes companies like SpaceX and Airbnb that you mentioned earlier, which are really private by design as opposed to by necessity. And so I don't think this is going anywhere. I actually think that there will be significant demand for many years to come. This market will become much larger and much more liquid. And I think that it will be occupied by a number of native brokerages as well as incumbents like some of the large banks.
I think one of the issues, Jihan, is how to get access to this and whether individual investors can do that, into your world of venture capital and a piece of these companies during their growth phases before they go public. Uber's a great example because all the investors, the private investors made money, but the public investors haven't.
That's exactly right. And there's significant issues with negative and adverse selection here when you're thinking about private markets and in most assets in general, but I think it's even more exacerbated in a market like this where demand very materially outstrips supply. And that is typically the types of names that you can get access to as an outsider or somebody who's not on the inside of these very organic Silicon Valley networks are the companies that you don't want to buy. And the companies that you do want to buy are spoiled for choice. They have many more investors than they need. They have much more capital knocking at the door than they have shares available. And so although I think that the entrance of these incumbents will surely increase volumes materially, I think that we'll see exponential growth in this asset class over the years and decades to come. I think that will also continue to be dominated by specialty fund managers, be that hedge funds or venture capital funds, that do have the experience on the ground sourcing those shares in a much more organic way. This is very different than logging onto your Bloomberg screen and buying or selling, executing shares in the way that ourselves and many other investors who were trained in these sort of more classical models have experienced. And so I think there will be a learning curve for the incumbents, but we welcome them. And we do think that this is only the beginning of a very large influx of capital to these traditionally non-accessible assets.
If you're kind of simplify it and say you're a broker of these types of shares in these companies, what's the fee? I mean, clearly public markets brokers have competed away the fees to a matter of basis points. What's a fair fee that you can charge still when you give a private investor access to these private companies?
Yeah, it's a great question and an important one for investors to think about. From our perspective, we're a fund manager. We don't broker shares in these kinds of businesses. But Forge, JP Morgan now is in the game. Many other competitors in that space can typically charge anywhere between 2 and 5% of the actual AUM. And so it's a lot like the credit markets, circa, say, 2005 or 2006, when they sort of traded on appointment. The bid offer was very large. The pay to play was quite large. And unsurprisingly, those brokerage fees will be arbitraged away over time as more capital and more competitors come into the space. And I would expect the fees at JP Morgan without any inside knowledge of their pricing systems, which you would expect them to use their large balance sheet to arbitrage away some of that bid offer, which is good for investors as well as good for fund managers.